Hello and welcome to this new edition of News Insurances Weekly. In this week's top news, talks have broken down over a joint venture between Standard Life and Bank of China. AIG has been present in the news these past few days with a new credit agreement and a new bid for its Asian subsidiary. We have met with Steve White from the British Insurance Brokers Association. Standard Life hoped that Bank of China would have taken a majority stake in its Hang An Standard Life business. The joint venture would have permitted Standard Life to better sell its products through Bank of China's distribution channels. A source within the company stated that they are disappointed about the talks, but their business in Asia is still successful with joint ventures in India. Standard Life joint venture businesses only represent 1% of sales. The company is still set to develop business in the lucrative Chinese market. AIG signed credit lines worth $4.3 billion with 36 lenders. A $1.5 billion credit agreement has been reached for 3 years and another $1.5 billion for 364 days. Chartis, its subsidiary, will receive an additional $1.3 billion. AIG's Asian subsidiary, Nanshan Life, received a $3 billion bid from China Trust Financial. This is the highest bid yet for the subsidiary. These mark strong developments for the company to get off of government life support. We have met with Steve White, Head of Compliance and Training at BIBA, who shares with us a few words on 2010 and what will be new for 2011. Let's listen to Steve White.
2010 has been a particularly busy year for BIBA. We've had a number of issues that have been on our agenda. We started the year with a bombshell in the taxation area with regards to the application of insurance premium tax, IPT, to broker fees. The legislation was extremely poorly and widely written. That involved us having plenty of meetings in early January with the revenue to try and make sure that the changes to IPT addressed the specific issue that they were looking to address. And after many hours of negotiation and a discussion with the revenue, we actually got a positive resolution on that one. So that was a very good start to the year from BIBA's perspective. Taxation has continued to raise its head with work in Brussels on the VAT directive and more recently around IPT issues on bordereau type business. There's been an increase in IPT come through for January 2011. It's the first increase for a number of years, and the way that the increase will work this time isn't the way it worked last time. So that's caused quite a lot of work in our area in terms of negotiation and information to members. We've had the major pieces of work around a change of government, a change of regulator, all year talking about the huge increases in the levies in the financial services compensation scheme. And while all that's been going on, of course, there's been the developing work with the Insurance Mediation Directive, the revision that's going on within Europe that's spent an awful lot of our time going backwards and forwards to Brussels and engaging ourselves in the debate there. So a very busy year. 2011, I think, will be equally busy, if not busier, but it's better to be busy than not.
Thank you for your attention, and I'll see you for next week's edition. And I wish you a wonderful new year.